This time is different. That's what you keep hearing right now. On YouTube, on X, everywhere. And honestly, looking at the Bitcoin chart recently, I understand why people think that. Because despite this being a bear market year, Bitcoin has looked incredibly strong over the past few months. So the narrative is slowly shifting from bearish back to bullish. But what if I told you that this exact thing has happened every Bitcoin bear market? And what if the rally we are seeing right now is just another counter-trend rally before Bitcoin hits its final low? So I decided to analyze every Bitcoin bear market to see whether this time is actually different. And the similarities I found are honestly kind of crazy. One thing that has happened before every major Bitcoin bear market is the bull market top forming in the post-halving year. We saw this in 2013, 2017 and in 2021. And most recently again in 2025. But not only that, all these tops happened in Q4. And right after those tops, the bear market began. Now obviously every cycle looks a bit different. Some rallies are stronger, some crashes are more aggressive. But when you zoom out, Bitcoin has followed a surprisingly similar structure over the past decade. And this is where things start getting interesting. Because historically these bear markets tend to last around 1 year from the post-halving year top to the bottom. Which would suggest that even though Bitcoin is looking strong right now, the real bear market low might still not be in. And if history is repeating, that low could be around October 2026, around 1 year from the 2025 bull market top. Now the difficult part about these bear markets is the path down, because Bitcoin never just goes straight down. Instead, every bear market gets these massive counter-trend rallies, strong rallies, long rallies, rallies strong enough to convince that the bull market is back on. And eventually every single one of these counter-trend rallies eventually rolled over. Which is why the current rally over the past few months is so important. Because what if this is just another version of the same thing? Now if we zoom into the smaller time frames, this is where things become very important. Because it's usually on the smaller time frame you can notice a move before it happens on the bigger time frames. Right now from the Q4 top, Bitcoin dropped around 52% before putting in a low in February. And ever since that February low, Bitcoin has started picking up bullish momentum again. The market looks strong, sentiment is improving, and some people are becoming bullish again. But there is one level that has ruined these counter-trend rallies in previous bear markets, the 200-day moving average. So let's compare what has happened in previous bear markets. Starting with 2022, Bitcoin dropped around 52%, then the market rallied hard. People thought the bottom was in, but eventually Bitcoin rallied directly into the 200-day moving average before rolling over again and continuing lower. Now let's look at 2018. Now these early bear markets are a bit different because they have way more euphoric tops, meaning the 200-day moving average didn't have enough time to catch up immediately. But if we go to the same time period in months that we are currently in right now, Bitcoin had dropped around 45%, got a counter-trend rally, and once again found resistance around this 200-day moving average. So naturally, looking at this, you might think Bitcoin is gonna reject from this 200-day moving average. But here is where things get more difficult, because 2014 behaved differently. In 2014, Bitcoin also had around a 52% drop before getting a counter-trend rally back toward the 200-day moving average. But this time, Bitcoin actually managed to spend time above the 200-day moving average. And for a while, the market generally looked strong again. But despite spending months above that level, Bitcoin still eventually broke back down and continued lower anyway. And I think that's really important, because even if Bitcoin goes higher from here, history suggests that doesn't automatically mean that the bottom is in. But this is where things get really interesting, because June has historically been a major turning point in Bitcoin bear markets. And once you see this pattern, it becomes hard to ignore. Historically, if Bitcoin entered June after a counter-trend rally, that marked the top for that counter-trend rally. But if Bitcoin entered June during a crash, June often marked a temporary low before we got a counter-trend rally. And this is something we can clearly see across previous bear markets. In 2022, Bitcoin went into June after going lower, and June ended up marking a temporary low. The same thing happened in 2018. Bitcoin had been dropping into June, and then we found that temporary low and got a counter-trend rally off it. But 2014 was a bit different. It went into June after rallying and ended up marking a temporary top before eventually going lower. So every major bear market had a key turning point in June. And right now in 2026, it's May, and we are getting closer and closer to June. Which raises the big question: what is June likely to become this time? A local top or a local low? Now, just looking at Bitcoin right now, the market has had a very strong rally and bullish momentum. It has started slowing down slightly at the time of recording this video, but unless Bitcoin continues dropping rapidly over the next few weeks till June, then the most likely outcome historically would seem to be a local top and end of this counter-trend rally that has been going on since February. Now, obviously, this turning point in June could happen in early, mid, or late June. We simply don't know yet. But what we do know is June has mattered historically. Now, if we are expecting the final bear market low being around 1 year from the top, then the next question becomes, how low could Bitcoin actually go? Now, obviously, getting an exact price target is impossible. But what we can do is build a historical range. And to do that, we can use the Fib retracement tool. So let's start with the 2022 bear market. The way we measure this is from the 2021 bull market top down to the 2018 bear market low. And when we do that, Bitcoin bottomed between the 0.236 and 0.125 Fib retracement levels. And from the top to the bottom, that ended up being more than a 70% drop. Now, this isn't just something we saw once. The 2018 bear market showed something very similar. Here we measure from the 2017 bull market top down to the 2014 bear market low. And once again, Bitcoin bottomed inside the same Fib range. And from the top to the bottom, that ended up being more than an 80% drop. And guess what? 2014 showed similar structure. So let's try and apply this to the current cycle. If we take the 2025 bull market top and measure down to the 2022 bear market low, then the historical Fib range between 0.236 and 0.125 would place Bitcoin somewhere between roughly 41 and 29k. And if we compare this to the historical drawdowns we have seen in previous bear markets, around 70 to 80%, then a 70% drop from the 2025 top would place Bitcoin around 38k, which sits directly inside this Fib range. Now, I already know what people are going to say. The 2025 bull market top wasn't nearly as euphoric as previous bull markets. And honestly, I think that's a completely fair argument, because compared to previous bull market tops, this one didn't feel as insane as those ones. But here's the problem with that argument. We have actually seen something similar before. Back in 2019, Bitcoin didn't have a euphoric top either. But despite that, the drop that followed afterwards was still brutal. From the top, Bitcoin dropped around 53% before putting in a local low. Then came the counter-trend rally. And remember earlier when we talked about the 52% drop during previous bear markets? This was almost the exact same thing. Then after that rally, Bitcoin eventually rolled over again. And when we measure from the 2019 top to the eventual low, Bitcoin still dropped more than 70%. Now obviously the second leg was heavily impacted by the COVID news, but I still think this is important because it shows even without extreme euphoric tops, Bitcoin is still capable of seeing extreme bear markets afterwards. Now what could actually cause Bitcoin to continue rolling over from here? In my opinion, one of the biggest factors is the S&P 500. Whether crypto people like it or not, the S&P has a major effect on Bitcoin and the broader crypto market. And recently, the S&P has just been flying to the upside. But what if this move higher is temporary? What if the S&P breaks down and eventually finds a low later in this year? Because historically, major turning points for the S&P has surprisingly lined up with the same turning points for Bitcoin. Just look at 2018. When you take the Bitcoin chart and overlay the S&P, the similarities become really interesting. The first major Bitcoin low around 6K happened around the same time the S&P found a low before it began to rally again. Then both markets rolled over around the same time, and eventually the final low for the S&P also lined up closely with the final Bitcoin low in 2018. And remember how that first low was around 6K? Now in 2026, you can just add another zero at 60K. And something similar might already be happening right now. The S&P found a low and started rallying, and Bitcoin also found a low at 60K and started rallying almost the exact same time. So what if the next major breakdown in the S&P ends up lining up with the final Bitcoin bear market low later this year around Q4? That's a very real scenario and a possibility I think most people are underestimating right now. Now obviously anything can happen. No one knows exactly where Bitcoin is gonna go next. But after analyzing every Bitcoin bear market, it's honestly hard for me to ignore how close this cycle has been to the previous ones. And if history really is repeating once again, then there's a very real chance that the bottom is not in yet. But let me know what you think down below. Do you think this time is actually different, or do you think Bitcoin is simply repeating the same bear market structure once again? And if you enjoyed this analysis, remember to like and subscribe. Comment down below what I can do better. I love to hear from you guys, and I'll see you in the next one. Peace.